Hey, this is Sasha. Thanks for joining me in today's video. What I wanted to share with you today is a quick little insight into the options membership plan that we offer. So if you're into trading options, if you want to get a quick glimpse and idea of what goes on behind the scenes here, we get a chance to really just work with you, specifically hone in and work on a select few people that attend either the live sessions, ask questions through the email, and that way we get trade ideas and setups for the current market conditions. So if you're interested in joining, you'll get to see a quick clip right now. It's a little preview, it's cut, so you get to see an idea of what goes on behind the scenes. Again, if you're a member, you get the access to the full video. And some of those videos actually are quite long and lengthy and detailed. So they might be 38 minutes, 39 minutes, 17 minutes, 42 minutes. So as you can see, they are quite detailed. Now, to get this membership, what you could do is go to the tradersfly.com website, and you can head on over to members section over here. By the way, there's a lot of great freebies over in this area, or if you're brand new to options, just go ahead and go to the options trading 101 section. But when you click the members tab over here, you can go in, click the options, ideas, and strategies, and this will give you some ideas and insight of what it's really all about, along with some FAQs. And for you being, watching YouTube here and checking things out, I've created a little coupon code for the first month. It's called Share the Love, and that's only available here during kind of this segment and this video as you watch this. You might be watching this video, a month or two after it's released, and if that's the case, then the coupon may not work. So just understand that coupons do expire from time to time. But in this case, if you're interested in joining, check it out. You'll get 50% off here on the first month. So anyways, thank you so much. Enjoy the clip, and I will see you next time. What we'll do is we'll go ahead, maybe I'm going to do a 38, 31 day, something around there. I think that'll be good enough for now. If I go too far, 59 and 87, you could do that. There's nothing wrong with that. For a long investment, let's say I go to 390, because you'll get a bump in the Vega. So let me just show you this. It's just a lot longer than I would normally want to be in the trade. But the Vega, relative to your theta, you got a very big Vega, and you would structure it more like, you got to give it room, because this is stocks you believe in. So you would think, okay, well, I'll maybe structure like this, but with the Vega so big, you might want to go ahead and structure something where you're overlapping 2 or 3 calendars. So something like, you might go ahead and do like a hybrid mixed calendar. So here's what I've done. So I've got a 1-2 spread on my calendars, and I'm going further duration. That gives me that positive delta there, because if I did it just a single calendar, kind of at the 380, you only got about 2 deltas relative to your Vegas. But here, as you stack another one, no, your theta is bigger, but your Vega is a lot bigger. That's one thing. But your delta is bigger. So you want to always look at the delta side. And now what you can do is actually bring back one of the calendars and bring back the other one, because now at least what you're doing is getting and capturing more of that theta without that pullback. So this gives you range to about, let's say, 390. And if you look at the charts here, and we look at Apple here, 390, we're kind of way up here. So that gives us another 8% move higher. So another 8% to the upside. So I think that is a good range, is when you're looking at these things, you want enough range. If you're speeding things up, the great thing about these trades is as it's speeding things up, you could almost stack another calendar right there, and that will increase because think about it, you're increasing some delta, so that'll increase it. And the good thing is because these are balanced, right? It's not like a diagonal. Your capital requirement in use is not as bad, because you might be wondering, well, why wouldn't you use a diagonal? Well, the reason I might not want to use a diagonal is, number one, the margin efficiency, the capital efficiency. That's first thing. And the second thing could be, I'm worried about a pullback. If I'm worried about a pullback, I'd want to keep things a little balanced, but I just structure it more on the directional side this way by keeping it balanced. The third thing is if you're having a little bit of trouble with something like this stock, where the diagonal, let's go ahead and see if we can get this diagonal set up a little bit. Sometimes the diagonal spreads are not perfect, where you're trying to tweak them a little bit. and you're just doing one contract, when you do one contract, you can't take one off into strength and so on and so forth. When you're dealing with 2 to 3 contracts, what's interesting is you can start creating a hybrid and a mix. So if I go back and I do like a 370, or let's just do 360 on both, and here I go back to a calendar, what I could do is, let's say I start mixing things in and I've got a calendar all over the place, because this is what, thinking about bigger management positions, this is what starts to create some interesting trades, is that now you have, let's say this one is 380, this one is 390, and I've got 2 contracts here, I've got 1 contract here, and let's just say I've got another trade at 365. Will it have it? Not traded. Okay, how about 370? Okay, so you start creating this hybrid, and I want a little more calendars over here. So now you've got this spread right here that's a big mix. Okay, Justin asks, how would a diagonal be better than a calendar in the long portfolio position? Well, simply put, a diagonal is better than a long portfolio, because with a calendar, do I still have risk on the upside? Yeah, if this overshoots, because we've got earnings coming up, if this overshoots, I've got a problem. With a diagonal, you're not really going to have a problem as much if it overshoots, because your line, your white line, will be a little bit more like that, and then it'll teeter off. It'll kind of be, you'll have much more range in that white line. That's why the diagonal is typically better in that respect if it overshoots. Here you've got risks in a way in both direction, but I'm minimizing the risks in the upper direction by giving it more range and room and having those extra deltas. So more than likely, unless it explodes by 10, 20, 30, 40, 50 points, I shouldn't be in trouble. All right, so there you go. Hope you got a good insight and quick glimpse into seeing what the options membership is all about. I really hope you join us by just going to the tradersfly.com website. When you're there, check out some of the freebies that we also offer, and go to that membership section and sign up. And this way you get some more insight on the current market conditions, how to trade it a little differently when the VIX is high, when the VIX is low, different types of strategies you may take a look at, some of the pros and cons of the different strategies, and what may work a little better for you and your personal situation. Anyways, thank you so much. If you're brand new, remember to hit subscribe here on YouTube to join us, and that way you keep seeing some of the new videos that we release, or join our newsletter list by clicking the link over here. Thanks again, and I will see you next time.